Welcome everyone, and thank you for participating in today's webinar. What story does your 990 PF tell about your foundation? My name is Talia Rivera, and I'm the Director of Private Philanthropy here at the Council on Foundations and your moderator this afternoon. Today's webinar will be facilitated by Foundation Center's Janet Camarina, Director of Transparency Initiatives, and Davis Parchment, Manager of Knowledge Services. Before I turn it over to Janet and Davis, I'd like to share a few housekeeping items with you. To access the help desk, select the help option in the toolbar at the top of your GoToWebinar navigation panel. If you'd like to ask a question of our speakers, click the questions box to type and submit your questions. Underneath the question box, the presenters have uploaded several documents that they will be referencing throughout their presentation. If you need to exit the webinar, click the gray X in the upper right-hand corner of the gray webinar navigation bar. And finally, a recording of this webinar will be made available on the Council's website. I would also like to remind everyone that this webinar and the comments of our guests should remain off the record so that everyone might feel comfortable engaging in this important discussion. Thank you again for joining us, and now I'll turn it over to Janet and Davis.
Good morning, good afternoon, everyone. I want to be time zone sensitive. As Talia mentioned, I'm Janet Camarina, Director of Transparency Initiatives for Foundation Center. Thanks to the Council on Foundations for hosting today's webinar. What you're seeing here, if I can advance the slide, there we go. What you're seeing here is just a short overview of what we'll be covering. Specifically, we'll be reviewing how to understand the implications of the Open 990 PF and also how to use the 990 PF to tell your story, and looking at it really through a storytelling lens, which I think is probably a bit different than the way you're used to thinking about it. And we'll have plenty of opportunity for questions throughout. You'll see some slides pop up with questions, so save your questions till those come up, and then you can type them and we'll address them as they come in. I should also mention what this session is not. I want to emphasize that we're not tax preparers or accountants. I'm actually a librarian by training, so Davis and I will not be giving tax advice. But as a reference librarian at the Foundation Center for many years, what we bring to this session is our expertise in knowing how researchers, philanthropy advisors, journalists, nonprofits, and activists use the 990 PF, and we can suggest tactics for an era in which many more people now have greater access to this data than ever before. The days of them coming into Foundation Center to ask a trained librarian how to interpret the document and what the different fields are and how to compare them are over. And so you need to be prepared for how people might access this information and use it and really look at the document through that lens in addition to seeing it as a regulatory document. We specifically gave this the Once Upon a Time title because we're looking at how the tax return can tell a story. So as an English major, I love thinking about the 990 PF in this way. Just think about the different kinds of stories that exist. Fables, morality tales, horror stories, and how what's in your 990 could be used to shape such a story. This is also a shortened overview of a half-day seminar, so think short story rather than novel. Finally, I also want to flag that we're focusing specifically on the 990 PF and not looking at the 990, which is a completely different document. So today's material will be most relevant to private foundations, but the general information and tips we provide should be helpful for everyone. I want to start with where we are today and how we got here, because I think that in and of itself gives some good background to the differences of today versus what the document was like in the past. Because most of us have always thought that the 990 PF tax return has always been a public document. That's what we're told. It's one of the cornerstones of the regulatory system and transparency and philanthropy in this country, right? But what a lot of people don't really understand is that even if you had been filing your 990 PF electronically, as many foundations are required to do because of their size, it was actually not being released that way by the IRS as an electronic or digital document. Back in the old days, say 5 or 6 years ago, it was being released as something called a TIFF file. And a TIFF file is basically a photograph. The IRS was literally taking pictures of your e-filed forms and pictures of all the manually filed forms, including some that are filled out in pencil. And yes, there are still some that are filled out in pencil. And then making them available for a processing fee to organizations like Foundation Center and GuideStar and others like us that try to then extract data and meaning from them. So the slide you're looking at now displays what it meant until just very recently to go through that process. We would get boxes and boxes at the Foundation Center of DVD-ROMs full of these TIFF files. We actually had 7 million of them in our database. We had to convert them to searchable PDFs, optically scan the parts of them that could be scanned, and then manually key in data for the rest. That's one of the reasons that a number of years ago we created an electronic grants reporting system, or e-reporting, by which more than 1,400 foundations in the US electronically send their grants data directly to us. So we don't have to go through this really cumbersome manual process. In 2011, the Aspen Institute's Philanthropy and Social Innovation Program launched a program on transparency and innovation to encourage e-filing of the IRS Forms 990 as open data. They issued an important report in 2011 called Information for Impact, Liberating Nonprofit Sector Data, and what this could mean for the sector and how it could be very transformational. The man you're seeing here is Carl Malamud, who's an open data crusader, and he gave the process a pretty big push. While all the conversations were going on with the IRS, he decided it was going too slow, so he sued the Internal Revenue Service to release the tax returns of 4 nonprofits that had e-filed their 990 forms. He sued, saying that if they were filed digitally, they should be released digitally. The IRS ended up losing that lawsuit, and all of us expected they would appeal it or do the minimum and release the 4 returns that had been the subject of the lawsuit. But much to everyone's surprise, they saw the future and realized and knew that eventually they were going to lose this fight and said, okay, we're going to release all species of Forms 990, including the PF, that have been filed digitally as digital, machine-readable open data. And that's where we are today. So in June 2016, the IRS posted a very large amount of 990 and 990 PF forms as machine-readable open data on an Amazon web server. This is what it looks like. Anyone can go to Amazon and download it. It's only on Amazon because they have a cloud service. It has nothing to do with the other products there. It could have been some other cloud service, but Amazon just has a lot of capacity in the cloud that they sell, and it's hosted together with lots of other open data sets, and it's completely free. All you have to do is create an account, and then you have to download the stuff. It's an enormous amount of information, so it helps to also have some large servers. This chart gives you an idea of what the IRS has released to date. It looks like they're going to be doing quarterly releases, and you can see in this chart how e-filing has grown. For example, in 2015, there were 103,000 foundations that filed 990 PFs, and 57,711 of those were available to us in machine-readable format. So that means that now over half of foundations are available, their tax returns are available as machine-readable open data. In the next section, I'm going to go over what open data specifically means, but before I do that, are there any questions on that background? All right. We'll just keep going forward into what is open data. Because most people think, wait a minute, we put our tax return right on our website for people to access and it's free, right? That means it's open. Well, open data is free, but what is free isn't necessarily open. There's other parts to the definition. And so here on this slide, you'll see the basic definition of open data. First, it's a non-proprietary format. And what's a proprietary format? A PDF is a proprietary format. You need Adobe software to open a PDF. And so it should be something that can be consumed by anyone, and more importantly, any machine, and doesn't require some kind of special tool that someone else created. It's machine readable, and what that really means is it can be directly read by computers and sucked right into databases and manipulated without any intervention. It's easy to access. If the IRS had said they were making this data open and it was in some obscure server somewhere that could only be accessed every other Wednesday or only on a full moon, that wouldn't be considered easy access. It has to be available all the time and open to anyone. It has to be easy to use in a format that people can access. And the IRS, to be honest, is still working out the kinks. It's still not that easy to use, but it's a lot better than the image files were. And most importantly, it has to be reusable without restrictive licenses. You don't need permission from somebody, including the foundation that generated the document, for somebody to access it and use it. Anyone should be able to grab the data and do whatever they want with it with no restrictions. And it has to be available at no cost. Those are the elements of open data defined. And here's what one of these looks like. To most of us, this looks pretty awful, but you show this to a computer programmer and they love it. What they see here is basically something that a machine can easily read and find the data points that are of interest to them because they're presented in a consistent tagged way. What they are seeing here is something that they can set up their machines to use. And it depends how big your screens are, but this is the actual open tax return of the Hewlett Foundation. There's a lot of information in there. There's the name of the finance officer, and you'll see it identified as a person. It's not easy on the human eye, but again, this is designed for machines. And that kind of consistency and framework is very important for a computer. Basically, anyone can now go through this and pull all the people out of these and create some kind of database of people in foundations. And we'll see as we get into some of the other things that people can do and pull out around this idea of telling a story about philanthropy. But big picture-wise, what this means is that our sector's 990 PFs are really out there for the proverbial two geeks in a garage with some good programming skills and a cloud server to basically have at it and start making comparisons and judgments. So it's best the foundations become familiar with the stories their 990 PFs might tell, or what data is in there that could be used to shape a narrative. The 990 has traditionally been something that's been done by accountants. We asked a group of foundation presidents recently if they had ever had a discussion about the contents of their 990 at their board meeting, and most just stared back blankly. This wasn't really something that was a board discussion. In some states, like New York, nonprofits are actually required to have the board approve the 990, but what we've heard is foundations have tended to either rubber stamp it or silo it to specific functions within their foundation, like accounting and finance, or outsource it. Today, because of open data, you really need to have a communications lens on your 990 as well, and really view it as a potential entry point for the outside world. So in the next section, we're going to explore the narrative that a 990 PF can tell about you. But before we move on, I'm going to pause for questions. All right. If there are no questions, I'm going to then toss it over to my colleague, Davis Parchment, to talk about the story elements of a 990 PF. So Davis, over to you.
Great, thanks so much, Janet. So Janet just sort of brought us up to the present day in terms of the history of how we got here. And we're going to switch into the story elements, but before we go there, what we want to try and do is just give ourselves a little primer about what exactly the 990 is. So the 990 PF is a document that every private foundation must submit every year to the IRS. It is a disclosure document that contains a vast amount of information that range anywhere from 24 pages to, I think, about 2,000 is the largest one I've ever seen over the years, which was the Walmart Foundation. And in that document, there's public disclosures on a lot of elements about the operations of a foundation. So the basic fiscals of the organization, the people, the applications applications, the programs, et cetera, et cetera. Now, this document is, as Janet said, supposed to be quote unquote, or I would say air quote, public, as it has traditionally been. And now what it's turning into is that all of these data elements, which are mapped out in this pretty form, are now turning into mapped data elements that are available in machine readable format. So tax returns are supposed to be made public. Foundations put them on their websites, or if they don't have a website, you're supposed to ask the foundation and they're supposed to release it to you, or you can ask for one from the IRS. Either way, they're technically public. It's the machine readable piece that's becoming interesting for us moving forward. Now, the IRS has some very specific things that they're looking for in the context of these tax returns, and they're really kind of looking at them as one-off documents, right? Questions about, the general balance sheets of the organization, revenue, expenses. Through a series of questions, they're definitely trying to understand whether or not the foundation is, quote unquote, making a profit in a traditional sense because of the special tax nature of the private foundation as being sort of a sheltered, even though you do pay some taxes. There's big questions about whether or not anyone is personally benefiting from this exempt status. So, are board members benefiting through businesses? Are staff affiliated in any way where they're making extra money beyond salaries, et cetera? So there's a whole slew of questions around that. A big one is whether or not the private foundation is meddling in the political system or lobbying or advocating for politicians, et cetera. And then I guess the thing that they're most concerned with is that the whole setup of a private foundation is to have this corpus through which they grant at least 5% of their total assets every year. And so there's sort of a reconciling as to whether or not the foundation met their 5% distribution requirement. And so that's generally what the IRS is looking for through these series of questions. But when we think about this transition and this pivot that's happening in the sector right now to, let's just map it out. Janet just showed you the numbers, 55,000 foundations that now have all these fields, yes, no boxes, amounts around salaries, amounts around all this stuff. Once that all gets mapped out and it's on this, what we would consider the high-speed lane, let's start thinking now about what these documents start to look from another angle. And that other angle is maybe a more skeptical angle, looking at comparisons between foundations, looking at sort of the innards of a foundation in a quick querying sort of a way. What are the stories that we could tell, not just from an individual foundation, but even looking across foundations? And so one of the narratives that seems to exist even without the high-speed lane of data that's going on right now is somewhat of a skeptical narrative that we've seen a couple times, or we've seen many times actually over the years, which is this concept of, well, as much as we inside of the philanthropic world know the great pains to which we all go through to make sure that there's, the money is distributed in a strategic and resourceful way, I think that a lot of people on the outside who don't understand philanthropy look into foundations with a very skeptical lens and often say, oh, as one of our communications colleagues who wrote a blog for Glass Pockets once said, before she got into philanthropy, she really thought that that a boardroom at a foundation was, and I'm quoting this, a boardroom was filled with guys playing Jenga with wads of cash, right? And that is a pretty abrupt way of putting it. But if you were to channel that narrative and look at your own 990, would there be any evidence of this? And thinking about it also when you compare it across other foundations. I mean, this is an example even, this goes back to 2003, but it is something that the James Irvine Foundation often lifts up as an example of why transparency is important, because in their 990, the compensation package for their president who was leaving reached almost $750,000, and there was no explanation for it. And what ended up happening, because they didn't explain it, is that it was actually something that was fairly reasonable. He was exiting, his salary was being paid commensurate with other salaries, and they had put a retirement package in there in his final years. Now, it was something that was understandable, but out of context, just having that number in there caused a huge ripple effect across the sector. And so there's been a lot of conversation subsequent to that as to how to make that information public, but also understandable. And so Janet's going to talk to you in a little bit about some tactics for doing that, but this is way pre high speed lane in terms of data. So now we're sort of thinking a little bit more in terms of what it looks like. So the most obvious and low-hanging fruit area to be careful about the fat cat narrative and to make sure that you're sort of clear at least about understanding this is that in Part 8 of the 990 PF, foundations have to list off all the names of their officers and directors, whether their officers are being paid, trustees as well, the 5 highest paid staff and the 5 highest paid contractors with the full packages of their compensation. So that's one place to take a look at it. Janet's going to actually walk you through some work that we've done with benchmarking so that you can understand some other areas where salaries and also travel expenses and admin costs and all those other things that might help to fulfill that potential fat cat narrative that you want to avoid and or explain. So Janet, I'll turn it over to you for the epilogue to our story.
Yes, the English major emerges again, and every good story has an epilogue, and often that is told by, an omniscient narrator who explains what happens after the story ends. So how might having open access to these story elements shape narratives about your foundation? As Davis pointed out, one with the fat cat narrative. So let's see, oh good. So remember, having open data means that the data is open to analysis by more and more people. And the 990 not only tells the story of your organization's activities and work, it also tells the tale of how efficiently you run and how you compare to similar foundations in areas of expenses or grant making. What you're seeing here on this slide is several years ago, the Foundation Center developed a foundation finances benchmarking tool where we took information from these tax returns for about 1,500 foundations, and we turned it into a searchable database that would allow you and us essentially to go into it and compare foundations. You could go into it with your login from your foundation, answer some questions about your size, whether you had staff, whether you worked internationally or domestically, what type of foundation you are, basically a bunch of questions. And automatically in the background, it would calculate a peer group for you of like foundations, and then it would benchmark your expenses for things like compensation, legal fees, accounting fees, rent, all the stuff that is line items on the 990 that we could extract. And it would be according to a peer group of like foundations. So it would be possible to do internal auditing and monitoring across the field and wouldn't rely on survey data, but actually the public document that everyone has access to. So with the IRS data being open now, this sort of comparison can be done by many people just working with the raw data. So it's a good idea to be prepared for what they might find and really think of it as an opportunity for you. You could do the same thing because most foundations have peer groups that they look at. So you could do the same thing across a few foundation 990s, for example. Here with the Foundation Financial Benchmarker, it notes each expense category and displays how your foundation compares to its peers. But the key thing is just make sure you stack up. This is an opportunity both for the outside world, but also for you to use the 990 data that's out there to see how you might be able to improve or just see where you're in step or out of step with your peers. So the message here is remember that your data can and probably will be compared against other organizations. Be sure to completely and accurately fill out your administrative expenses fields. We do see a lot of errors sometimes in those fields. And now that it's open, the stakes are a little bit higher. And again, don't consider it a gotcha, but use it as an opportunity to improve and think of it more as a diagnostic. And one strategy that we've seen foundations use is something called the Reader's Guide to the Form 990-PF. This, again, is right on target with thinking of the 990-PF as a document that tells a story. Often readers' guides are supplied by authors for their novels. In this case, some foundations are being proactive, particularly larger foundations that recognize, hey, the larger we are, the bigger target we have on our back. So instead of waiting around for somebody to ask us a hard question about our 990-PF or hope they don't find the thing that we're hoping they don't find, we're going to prepare a document that gives our staff talking points and also make it available on our website. So any user who accesses our 990 can access the Reader's Guide, whether or not they ever talk to a foundation staff person. So the Reader's Guide basically walks people through the 990 and provides interpretation of how to interpret the numbers and gives context for some of the numbers that may seem out of line. And so since this can be such a helpful tool in this era of open data, we actually created a handout in which we go into more detail during our half-day seminar, but we thought it was important enough to provide it. So it's one of the handouts that is available to download. And it's basically a worksheet that would walk you through creating some of the numbers and thinking about areas which might require explanation if you were to create a reader's guide for your foundation. And you could also, we encourage you to review the reader's guides that are already out there. The Robert Wood Johnson Foundation and the Bill and Melinda Gates Foundation both make these available on their website. And so that might be a source of inspiration for folks on the call. And with that, that's a little bit about the fat cat narrative and strategies to think about it. There's other narratives, however, and an important one is the hypocrisy narrative. So I'm going to turn it back over to Davis to talk about that.
Great, thanks so much, Janet. Yeah, I think when the fat cat narrative is one that we more commonly think of, the hypocrisy narrative is one that does have some headlines that we've seen come across the airwaves, but is lesser known because this is really an area where the changes in the data flow are really going to have a substantial impact. So the hypocrisy narrative is really the concept of, is the foundation in line with its mission, with its whole organization? Are the right and the left hand working together? And is there a possibility that the foundation's mission is at odds with, say, its investment portfolio? And so the idea of negatively screening the investments, which are now going to also be in that machine readable format, is something that foundations have not done as much of as they probably could have. And we see this evidenced all the time in terms of foundations who have missions. And again, this is not at all to shame any one foundation whatsoever. This is more just an example of where the foundation's investments being in line with the mission of the organization is something that is not always possible, even the way that foundations are invested, but it's something to at least be aware of. And so this is an example, for instance, of a healthcare foundation whose mission is to improve the health of the neediest and most underserved residents in Orange County. And when we look up their 990 and we do a search in our databases, which right now, as Janet mentioned, up until now we've been scanning and making sort of searchable PDFs of these 990 PFs. So we already have sort of, as machine readable as that technology would allow, the ability to keyword search into over, I don't know, it's like 100,000 foundations times like 20 years. So you do the math. I mean, we have a huge repository of 990 PFs. And when you search in our databases for the word Altria, which is the parent company to Philip Morris, what you see is that we've got almost 48,000 records where they have shown up as an investment in those for those foundations. And if you look down at the bottom for fiscal years, it's 5,000 a year plus of foundations that are invested in Philip Morris. And if you notice at the bottom of the page here, the Healthcare Foundation of Orange County is in there. And when you then click on their Form 990, you can go right to their tax return form where they list off their holdings and the value of their holdings in Altria Group. Now, again, not intended to shame them in any way, but this is one of those areas where there's going to be ample opportunity to build out those narratives. And Janet's going to talk to you a little bit more about some of those narratives, but this is just a sample of some of the headlines that we've already seen come down the pipeline around fossil fuel and arms industries and for-profit prisons and a whole host of other investments that may not necessarily be consistent with the mission of your organization. So here, Janet, I'll let you take it away for foundation investments.
Yes, foundation investments have epilogue potential too, and so this section will focus on that. And just a bit of background about reporting investment income, so you're aware of the ground rules. First, as most of you probably know, private foundations are required to pay out annually an amount equal to 5% of the market value of their non-charitable assets. But another requirement is that they must also pay 2% excise tax on net investment income, and most importantly, provide a complete schedule of investments in their IRS filings. Since a complete schedule of individual investments is included with your return beyond tracking payout and excise taxes, open data makes it easier for the public to analyze how your endowment is invested. So it's important to be aware of the following. What companies is my foundation invested in? How do my investments compare with those of my foundation cohorts? Do my investments help advance the mission of my foundation? And are there reputational risks that we should be aware of related to our investments? In our experience, this is an area where foundations are very vulnerable because the business as usual approach, in which there's very little negative screening in use by foundations, will set the stage for some pointed questions and narrative that the field will have to grapple with. You are probably familiar with the debate about whether or not foundations should invest foundation endowments in mission-positive activities. We're not really here to take a position on that, but really what we're trying to do is point out that whatever your foundation's operating principle is on this, the new openness of this data requires that foundations be prepared to explain the rationale behind why they invest the way that they invest. For example, whether your foundation does mission-related investing or not, do you do negative screening, in which you at least screen out investments that could be viewed as toxic or directly conflict with your mission? Think of things that have a mission negative approach rather than mission positive. In our experience, most don't. And according to a CEP study done about 3 years ago, only 17% of foundations in their survey reported using negative screening to scrub their investments of potentially embarrassing choices. And the Nonprofit Finance Fund often raises the question of why do foundations spend so much time, staff, and energy conducting due diligence on 5% of their assets, only to ignore or relegate the other 95% to relatively little screening. So to try this out ourselves, we've been experimenting with an investment analysis prototype that's supported by the Heron Foundation, which does advocacy around encouraging foundations to adopt a socially responsible and mission-related investing approach. And so to try this out, we downloaded more than 93,000 publicly available, machine-readable 990 PFs that were e-filed during 2013 and 2014 tax years. About almost 40,000, or 42%, reported nearly 250,000 investments worth $180 billion, and about a quarter, or around 23,000 of them, reported investment income, but actually didn't provide any schedules of investments, which not only violates IRS guidelines, but also threatens the very foundation of transparency that makes open and publicly available returns of tax-exempt entities possible in the first place. These foundations, if caught, also risk having their returns considered not filed, fined, and loss of charitable status if it occurs 3 years in a row. So we don't want the message that you're hearing here to not report your investments. Don't risk that. It's not worth it. But what we do want to share is the way the field has been doing it is not representative of best practices when it comes to data. Right now, the data we're finding is ambiguous, aggregated, incomplete, truncated, and no standard identifiers. And this is more than a cosmetic inconvenience. Dirty data can result in foundations losing control of their narratives by allowing others to fill in the gaps and create their own stories based on inference, guesses, and bias. And I can tell you from my years at the reference desk that the 990 PFs we got the most questions about were those that people noticed that a foundation deliberately left something out. Or it could have been accidentally, but they assumed it was deliberate. Or an error was done. And people would ask us questions like, are they trying to hide something? And this inspires more digging rather than move along. So it's important that you not take the message that you're not to fill out the investment data. What's there is still allows for some analysis. Our investment prototype looked at reported investments from the top 100 foundations in terms of assets, again for years 2013 and 2014, which at the time that we did it were the most recent tax years available. This may seem like a small sample, but bear in mind that though this group only represents about 3% of all foundations, in terms of dollars, it represents nearly 60% of total foundation assets and over 40% of total investment dollars. So all totaled, this data set was consisted of 8,022 investments worth $77 billion. And 3/4 of all investments reported by the top 100 were in mutual and other funds, while 12% of all investments reported were in individual corporate stocks and bonds. And we tried to do some digging to see if we could find any reputational issues in our audit. And some things we found that could be used to create unflattering narratives about foundations or possibly be construed as the field working against itself and its philanthropic missions are that 3,128 foundations reported holdings in Altria Group, again, as Davis explained, one of the world's largest tobacco companies. 2,092 held BHP Billiton, one of the world's largest mining companies. And 163 invested in Sturm, Ruger & Company, the largest publicly traded U.S. firearms manufacturer. And as to the fund holdings, Vanguard is the world's second largest asset manager, and it's heavily invested in the two largest publicly traded for-profit prison companies, Corrections Corporation of America and GEO Group. And Vanguard happens to be the most popular investment vehicle for the top 100 foundations in our control group. So just because it's in a fund, that doesn't mean it can't be found. Only 14 out of the top 100 foundations held direct investments in tobacco, fossil fuel, and mining companies. The investments numbered only about 91, worth just $23 million. But the market value of indirect investments held by foundations in funds with tobacco, fossil fuel, and mining in the 10 most popular funds was worth more like $22 billion. So only fund names are reported on 990 PFs. It takes more work to uncover the fund components, but it can be done. And even semi-automated investment companies that manage more than $100 million in assets are required to report to the SEC via a publicly available 13F form on a quarterly basis. So what you should bear in mind is IRS investment data is just predictable enough to be normalized for querying by third parties. Direct investments in stocks at odds with foundation missions can be quickly found and shared. And the lion's share of foundation investment dollars are currently in large semi-opaque funds that will likely include components that don't advance your foundation's mission. Though it takes more work, these too can be found and shared. So what should you do? Trying to advance the slide. Specifically, be comfortable with what your investment strategy is and your portfolio. If you're not, ask questions. Find out if your investment company offers ethical investing options. If not, you may want to find one that does and revisit your policies around that. And pay attention to your portfolio. It can change over time. And there was a time that socially conscious investing and return on investments was not seen as complementary. But more recently, that's changed, and one of the world's best performing endowment funds that returned more than 17% on assets in recent years belongs to the Church of England, who's guided by recommendations from its ethical investment advisory group. So there's more variety in social responsible investing funds than used to be the case. This slide shows the 2013 program-related investments of the California Endowment, a Los Angeles-based healthcare foundation. In 2013, the California Endowment invested more than $10 million in FreshWorks, which is a public-private financing program created to bring grocery stores and healthy food retail to communities that don't have them. This investment is more an example of mission positive as opposed to mission negative that we just talked about, and just one example of an investment that aligns with the foundation's mission of bringing healthy food to underserved communities and promoting local entrepreneurs. So in this age of open data, it's well worth your time to revisit your foundation's position on mission-related and socially responsible investing. And whether or not you end up changing your investment approach, develop talking points ahead of time to explain if and when questions come in or the media comes calling. And before I take questions along these lines, I want to point out the Glass Pockets website, which is an initiative to encourage greater transparency that I lead here at Foundation Center. You're looking, some of you may be familiar with it, you're looking at a self-assessment we provide for free called Who Has Glass Pockets, and it's a tool any of you can use to assess how transparent your own foundation websites are. It's a 26-point assessment that looks at different categories of disclosures, including things like governance, grant making, and financial information. And specifically related to what we've just been discussing are examples of foundations that have a place on their public website where they explain the process by which they set executive compensation, and also other sections that publicly explain their investment strategies. So if you feel caught off guard by this and you're not sure how you would frame this disclosure around this, you can set the form to any data disclosure, and then Glass Pockets takes you to a list of links where you can view how other foundations are disclosing that information to give you ideas for what you might do. So in the executive compensation category, if you do go to glasspockets.org and do this, I recommend you look at the executive compensation Endowment CEO, Dr. Robert Ross, about the recent announcement that the California Endowment is scrubbing gun manufacturing from its investments in reaction to the Parkland shooting. They were already screening for tobacco and for-profit prisons, and in the last few weeks announced that they would no longer be investing in gun manufacturing because they also view it as at odds with their healthcare mission. So any questions before I turn it back over to Davis? All right, then, Davis, you're up with your giving story.
Hi there. So for those of you that do have questions, just know we've logged them, but we're going to take them all at the end because as you heard from Janet, that this is a compressed session from a half-day session, and so we're running a little tight on time, and I just want to make sure that we get through the material and we'll go through all the questions at the end. So we're going to transition a little bit now to the part, I think, when you think about the 990, and anybody who's been in the sector for a little while, you always think about those grants list, like the giving story, because that's kind of the most notable thing that traditionally has been looked for in your 990 PFs. It's where nonprofits tend to go to figure out whether or not there's a good match based on your history of giving. And it's where a lot of the research, especially that the Foundation Center does with being able to take pictures about what's going on in the field, where's the money going, who's benefiting from the dollars, what strategies are being employed, etc. All those questions tend to be derived from that history of giving that is in the 990 PF, and actually, and as Janet mentioned, also through our program called the e-reporting. So we want to spend a minute with you, not so much on a quote-unquote narrative as we've been doing, but more of thinking about how to make your giving story as accurate as possible. And this is one of those areas of the 990 PF where we would say more is more and less is less. But we really want to encourage you to be more accurate, more complete with the information that you share. So part 15 is the giving, so where the giving story starts, and a lot of foundations miss an opportunity because they tend to jump right over to the list of the grants. But there's this whole front section of part 15 that is a great opportunity to tell the story about the grant making programs of the foundation. It's where you can put the specific information about whether or not you accept unsolicited applications. Do you have an application process? If so, what is it? What are the deadlines? What are the restrictions for the foundation? This is a great chance to tell anyone looking at your foundation for various reasons how you do business in terms of grant making. And so this is an example of a foundation that has done a great job of doing it. There's some foundations, I would say, more often than not, unfortunately, that tend to be pretty sparse in the details. So make sure you take a look at this, take advantage of this to communicate with audiences. Now, the second part of part 15 is supplementary info, and this on the form itself is about a half a page. And since you are all grant-making institutions, generally you make more than probably 5 grants. And so the majority of the time what you see is foundations add an addendum to the back of their document and say, see attachment, or see Exhibit A, which then means that they tend to take formatting liberties at that point to cover what are supposed to be these 4 key essential data elements. The name and the address of the recipient status, i.e., do they qualify for the 5% in that, are they technically a nonprofit? The purpose of the grant, this is what we would call like a grant description, but there's great variation in terms of how people use that purpose of the grant box there and the amount of the grant. And so when we see tax returns, it's an Excel document, it's a spreadsheet of some other sort. It's it sometimes everything in a Word document. I mean, it really does vary, and the level of detail varies as well. So what I thought we would do now is sort of pivot the conversation to a couple recommended do's and don'ts. We're going to fly through this, but they're pretty straightforward. I mean, none of this is going to be very shocking to you. One of the things, though, before we get into the do's and don'ts is something, a little sort of sidebar about personal information. Many of you probably do give individual grants, and technically the IRS is supposed to redact any personally identifiable information. And now that we have seen thousands and thousands of examples of where that hasn't happened completely, we just thought we would make sure to remind you that if you are making grants to individuals, please, please, please be careful about putting anything about personal information, personal names, as social security numbers, addresses, anything that can be personally identified. That's a big, it's a big consideration in light of some of this publicly available data in machine readable format, but just something to consider as a best practice. Okay, so now moving on. Another thing that we see and that we not only recommend not doing, but also is technically out of compliance with the agreement with the IRS, as we see weird things like, available upon a request or miscellaneous, and just have like a summary amount. So it's a big no-no, don't do it. You really are required to put the details, those 4 pieces at least, for every single grant that you gave in that year. Another thing that we see a lot of is things like acronyms. Now, this happens to be the Society for the Preservation of Music. If you're not in Ohio, chances are you don't know that, and it's really hard to then be able to understand what the giving is about that. Similarly, we see, again, a whole ton of sort of variation about what is the purpose of the grant. Now, we're going to spend some time talking about how to use that purpose of the grant's opportunity well, with a couple kind of recommendations on what not to do. We also see often that foundations leave things blank, so we strongly recommend that you fill out at least, I mean, there's really only 4 main data elements, and if you're writing checks to a foundation, chances are you know the address, and the reason for this is that when you start looking at that data in aggregated senses, it's really hard to know which Boys and Girls Club it went to, which United Way that it went to, if you don't have a city and state address. So don't leave any of the sections blank. Avoid foundation speak. This is like to test approaches to increase voter participation or for the Community Pathways Initiative. This is a use of that space that doesn't actually communicate very clearly what the work of the foundation and what the work of that grant was. The other thing that we see a lot of is this idea of putting just charitable donation. These are actually snippets straight out of the instructions from the IRS for the 990 PF. And so while they say entries such as grants and contribution under the title are unacceptable, they only suggest you go as far as using an example like for nursing services or for fellowships or for assistance to indigent families. Now, we're going to recommend that you go one step further and talk a little bit more about what the purpose and the intentionality of the grant is. Now, one of the things that seems to be coming up quite a bit these days, especially with foundations that are working on sensitive areas like domestic violence or human rights, is that they're sort of juggling this appetite for transparency with also trying to protect their grantees. And so we work with a lot of organizations who have that balance where they're trying to kind of put stuff out there but protect their grantees. And I guess the one lesson we want to take away from that is that these are more the exception than the rule. We want the information out there. It's helpful to have as much information as possible, but we don't want anybody to possibly, be harmed by any of this. So we leave it to each foundation to sort of figure out what is that fine balance between protecting the safety of their grantees, but while also not doing any harm. So in talking about that purpose of the grant statement area, one of the things we would like you to think about is adding sort of, or considering adding 4 data elements that you would want to sort of consider as descriptors of the grant. And I'm going to show you how that pivots and turns into useful information in a second. But when writing a good grant description, try and answer 4 key questions. What is the primary objective of the grant? Were there any specific intended beneficiary, women or migrants or a religious designation? That is very helpful, especially when we're asking some of the questions now around beneficiary populations. What is the primary strategy of the grant? Was this a program grant? Was it capital support? Was it general operating? And then very importantly, because one of the limitations of the data right now in our sector is that all the grants get attributed to the parent organization's location unless we have other information. So you'll have, and what I mean by an example of this is you have in DC a ton of shops that are working in DC, but they're actually working overseas. And so being able to show the real push of where those grant monies are reaching is helpful if we have some information in the grant description. So where will the grant monies serve beyond the recipient address? What were the primary strategies? Were there any specific beneficiaries? And what was the primary objective of the grant? Now, that doesn't mean that you have to have 4 paragraphs in terms of a grant description. You can get those 4 pieces easily packed into a 2-sentence, into 2 sentences if needed. So another thing that we're also recommending you to think about is while the high-speed lane has definitely improved improved our access to information through through the 990 PFs, we really want to encourage you to e-report nonetheless, because there's still a delay. You're still talking 4 months after your fiscal year closes. You're still talking about the IRS sitting on it for a couple months while they process it. And our appetite for information has improved greatly in terms of using that data for strategic purposes. So you'll notice in one of the handouts here is we have an e-reporting template that you can download, and you can pull it down and see basically how the data, we would recommend that you share the data. There's an opportunity to share up to 20 data fields, so it's a bit of a departure from the 990 PF 4, but you don't have to fill them all out. You give us what you have, and you can make a regular practice of doing that. So let me show you a quick sample of how this works. When we receive a grant, generally through, this one is an example of e-grant, we have an autocoder that will come in and literally pick up, his name is Foundation Center Sam, and he'll read through that grant description and pick up those 4 key elements and code for those. He will literally look for population, what subjects and organization type, how, support strategies and transaction types, and geographic area served. And he will literally pick up those fields in the grant description for the who, how, the what, the how, and the where piece of this. And what you'll notice here, that this is a grant that was made to Humanity United for Human Rights Watch, which is based in New York City, but now we know that the grant is actually going to Thailand. And basically we'll code, so you'll notice that that grant suddenly has codes. Their primary subjects is immigrant rights. The additional subjects are freedom from slavery. The population served are male migrant workers, and these are all codes. If you don't know about the taxonomy that the Foundation Center uses, it's called the Philanthropy Classification System. It's publicly available, and we'll share the link with you. It's just taxonomy.foundationcenter.org. And basically code all these grants, and so that when you think about the stores that the Foundation Center hosts in terms of our role as the central repository of data, we now have, over 7, or actually more than that, way more than that, over 10 million grants. We're coding over 2 million grants a year, but they're nice and neatly organized so that when we get questions, like from different audiences all over the place about who's doing what with who, where is the money going, who's it benefiting, or questions like the International Human Rights Funder Group, what types of support strategies are advancing human rights, then grants like the ones that I just showed you get rolled up into these kinds of research projects to see specifically around, who's doing advocacy work in Asia around human rights grant making. And there's a number of other platforms that our data ends up pushing to as well. So what's crazy about this is if you actually look at Humanity United's 990 PF, I couldn't even find that grant that they reported to as an e-grant in the 990 PF because we didn't have the most recent 990 PF. But when you look at the grants as they list them on their 990 PF, the Human Rights Watch DRC, which is a different grant, and you look at that purpose of the grant, all it says is Africa Human Rights. So think about the depth of what we captured through that great grant description versus this purpose of the grant statement that is here. There's just a huge loss in information that we're having. So that's another reason why we really encourage you to e-report, but also to probably write also better grant descriptions. So I'm going to turn it back over to Janet to wrap us up for a second, and then we'll take questions.
Thanks, Davis. So just quickly to summarize, there's a mind shift that's needed about the 990 PF from compliance to communication. So I'm so delighted to see that in the roster for today that there's a mix of finance and communications people in the room. Yes, it's still a compliance document, but it needs to be done carefully to comply with the law. But we also need to realize that in the era of open data, it's going to become more of a communication vehicle, especially for those foundations that don't have websites. That's the only window people have on to view the work of the foundation. The second point is that the best defense is a good offense. Telling your story well increases the likelihood it will be retold well. That's no guarantee, but not telling your story or telling your story poorly increases the chances that your story will not be retold well. So to recap your next steps, first check and recheck your numbers, make sure they add up. When we put together the benchmarking tool I showed and the administrative expenses benchmarking tool, it was amazing how much work we had to do to add up numbers that it had not been added correctly. This was an example of foundations not even doing a very good job of the compliance requirements of the document. Same with the missing investment data. Consider preparing something like the reader's guide to your 990 PF, annotating things that might not make sense to an outside user or footnoting things that need explanation. Foundations are known by what they fund. Write good grant descriptions using the guidelines and do's and don'ts that Davis just outlined with the correct organization name. You just won't believe how many times we see organization names that are misspelled or again are only in acronyms. You want to give the correct name, EIN number if you can, or a bridge ID with the purpose and the amount. And related to this, our own experience with foundations is that if foundations are not particularly forthcoming or clear or articulate well, often there's suspicion that they're hiding something. So just go to town on section 15 on block 2. Talk about your priorities, your grant process, your limitations and restrictions. There's no harm in doing that. And in fact, it will probably help you get better proposals and help the world understand what your work is about. And while we're thinking about the outside world, e-report your data to Foundation Center so we have the most current, complete, and accurate story available about your work. And know what's in your investment portfolio. We've talked about that, but you want to be prepared to explain it or consider it an opportunity to revisit your strategy. And have a communications and or program set of eyes take a look at the 990 form before you hit the send button. And finally, assess the transparency and openness of your foundation's website on Glasspockets and use the profiles that are there to learn how your peers are opening up their work to the world. I know we're over time, but if you've stuck around and you have questions, Davis and I are happy to take them.
Yeah, we do have a couple of questions that have come in. I think it makes sense for us to ask one of them, and then for the other questions that came in, Davis and Janet will email you their response directly. So the first question says, our current 990 list our Vanguard accounts, which only shows the funds we are invested in. Will that stay the same, or will it somehow list the makeup within those Vanguard funds?
Even though your PF doesn't have that information, that's findable by researchers because Vanguard has to disclose that in a filing called the 13F, I believe. So it takes more digging, but it is possible for researchers to get to that even though it's not itemized on your 990. What people will find out on your 990 is who manages it, what fund it is, and then find the fund makeup from the reports from Vanguard.
Okay, I'm going to ask one more because it looks like folks are sticking around.
Okay.
Is the benchmarking data you mentioned still available for use?
Oh, the benchmarking tool that I shared?
Yes.
That's actually only an internal, it was a prototype we developed, and so it's not a tool that is currently in the market, but we were just experimenting with it to see what is possible. So that would be an example. If it's something foundations are interested in, they can follow up with us individually because it's not something that is currently a tool on the market.
Okay, I'm just going to ask another question, and there's still many attendees on the line. Does that SAM program mean that we no longer need to code for the Foundation Center separately?
Foundation Center Sam is a character I know and love that Davis invented because creating PowerPoints is one of her superhero skills. But it's actually it's just a fun little emoji to symbolize the machinery inside Foundation Center. So I'll let her address what you should do there.
That's hilarious.
Foundation Center Sam is kind of catchy. So the auto coding technology that we have right now does facilitate us pulling out keywords. The value add and the advantage of continuing to share your internal coding with us, I mean, you get 2 gold stars for using the PCS and sharing that with us. If you have your own coding system, it can be very helpful for us to see those codes, because we can help it because Foundation Center Sam, or the autocoder as he's known internally, is a learning technology. So we use it to help the machine learn how to pick up stuff. But if you don't code and you send us good grant descriptions, that is awesome. Good grant descriptions are awesome. So if you do code, continue to send us your codes.
Awesome. Well, Janet and Davis, we want to thank you for this incredible presentation, and we want to thank all of you who have joined us today, and thank you for sticking around. And we will see you soon.
Great. Thank you all.
Yes, thank you. Thank you both, and thanks to the attendees for your interest in this topic. I look forward to hearing from you. Both of us do, if you have follow-up questions.
Don't forget to pull down the handouts before you leave, though. Take the handouts. There's some great stuff in there for you. Okay.
All right. Thank you, everyone. Bye-bye.